Hello, I'm Jason Strongerhead. Welcome to my episode where I try to analyze what the market is looking to do in the following week. In this particular episode, I'm going to first share with you the stock market charting analysis to understand what are the chances that the market is going to come down in the following week. And also, even if it's going to come down, I'm going to share with you the reason why I'm not going to sell my stock anyway. So let's begin. Over here, instead of showing you the chart immediately, what I'm going to do this time around is going to show you how exactly which website to go to and how am I going to do my charting analysis step by step. Because some of you has been asking me, beside Think or Swim and the chart that I'm using, what are the other charts that can be easily available on the internet? So I'm going to start looking at it now and I'm going to show you how it can be done. Okay, so step one, what you need to do is you can go to this website called marketwatch.com. There are many other websites that can do the same thing, but I prefer marketwatch.com because it allows me to quickly just log on it and it's just a habit, okay? So over here, when you're looking at the overall market outlook, what are the charts that you can look at? Now, there are three that you can look at. One will be Dow Jones, the other one will be S&P 500, and the third one will be NASDAQ. Now, for NASDAQ, it's more to look at the technological stock overall outlook. And usually all the charts that I've been showing you are Dow Jones because Dow Jones is made up by these by the 30 strong companies in US to kind of represent the overall stock market outlook. But some people will tell me that only 30 is not a good representative of the overall market outlook. So then you can use the S&P 500 where it is using the 500 top US company combined together to form the index to let you understand whether the overall stock market is going to go up or is going to go down and what are they doing right now. So let's use the S&P 500 as an overall bigger representative. So let's click on it. Once you click on it, it will lead you to this particular page. Okay, and you can click on advanced charting. So when you click on advanced charting, it will lead you to the bigger chart. And over here, okay, this is where you will see the chart. So once you see the chart, now the first thing I do, it's always to remove all the analysis, okay, because I want to keep my chart clean. Now it's so much cleaner. I can see the whole chart, right? The next thing is I would like to add just one of my favorite indicator called the relative stock RSI. And always check out the longer term time frame first before the shorter term time frame. So let's take a look at longer time frame. And for me, it's going to be a weekly chart. Now over here, based on the weekly chart, the market is still up. Can you see if the trend is up, you will never, for me, if the trend is up, I will never go against the trend. So I will either buy and I will not short, example. Okay. But over here, can you see that the trend has been up, but it is slowing down? You can see that, right? Now, because it is slowing down, and therefore there's a chance that it may dip. Okay, if let's say right now this particular for the next week, if the market break below and end below, that means we have a lower low than the previous low. So there's a chance that the trend has changed. Okay, now let's take a look at the daily chart. So for the daily chart, okay, if you look at it now, there's really a slightly lower low than the previous low. So on the daily chart, you can say that there's a chance that the trend has changed. And over here, look at the RSI, it is already at the heated zone, not near the heated zone. Therefore, if there's a higher chance that the market may come down. Plus, some people say this is a head and shoulder pattern. Some people say this is a double top pattern. And because of all these patterns, okay, it kind of favor the market is going to come down in the short term. Now then, why am I not going to be selling? Let me share with you my reason why I'm not going to selling anything that I'm holding right now. Okay, the reason why I'm not selling anything at all, despite all the bad news like, wow, 36 million job loss, and then there are 42% of the job loss, are gone for good. And plus all the retail store is going to close down. Look at JCPenney filed for bankruptcy. Look at all the retail sales, has plunged, and it's going to be even bigger hit, following in the next quarter. So because of all these bad news, Jason, you stupid or something, how come you're not selling yet? Okay, the reason why I'm not selling yet is because of the following. So watch on. Number one. Now, I found a very interesting article which might interest you, and I pull out this chart. Many a time, whenever there's a shock. So for example, like right now, because of the COVID-19 situation, so the whole world has been shocked and the economy takes a dip. Now, after it has dipped, a country and the government will do all they can, right, in order to ensure that they recover from the dip. Okay, so you can see that Nigeria, they recover from the dip, and Switzerland, not only they recover, they did better than the previous dip. Now, they will do all it takes, and there's a lot of measurement. All these measures, right, that they're going to be taking, they will help to boost back the economy up to its normal or even better. Because, right, if they don't do that, there's a chance that once they dip and they don't recover, they will be trapped permanently under the poverty trap. And because of that, right, the country will stay weak and continue to stay weak for a long time. Okay, so therefore, in order to avoid that, all the countries will want to make sure they will do whatever it takes to make sure they go back up to normal or even better. And this is the reason why I am not going to be selling, because I am not betting against US. I believe US will go back up to norm or even better. So that's the first reason why. Second reason is this. Okay, if you look at the table, okay, of market performance, after the market is down 2 years, what's the chances that you will go up? Okay, there's a higher, more than 50% chance that you will go up. After the market is down 1 year, what's the chance that you will go up the next year? There's a 60% chance that you will go back up next year. When the market is up 1 year, what's the chance that you will continue to go up? There's a 83% chance that you will go up. Now, after the market is up 2 years, what's the chance that you will continue to go up? There's a 50% chance it will go up. So market always have a higher chance to go up than to go down. As a result, I'm not betting against the odds that the market is going to go up in the following year. And the next thing is this. If you look at the economy, right, when the economy is doing well, does it mean that the market will go up? When the economy is not doing well, does it mean that the market will not go up? Okay, so if you look at it, right, this is the GDP growth. Right? So when the GDP is more than 5%, the average stock return is about 10%. When the GDP is between 3.5 to 5%, the average stock return is actually higher than the when the GDP is doing well. And look at when the GDP is 0 to 2%, the stock market return is on average 19.43%. And even when the economy is not doing well, the stock market can still return 9.94%, Therefore, I am not betting against the irrationality of the stock market, because there's no correlation between the stock market and the economy. Doesn't mean the economy is not doing well, then the stock market must not do well. Therefore, I'm not selling anything. And if you look at the folly of stock market timing, right? Now, if you tell me that, hey, Jason, the market is going to come down, hey, the economy is lousy, you better sell now, that means you are timing the market. And if you look at two analyses, one by Bill Sharp and the other one by Monte Carlo, it says that in order for you to be able to time the market and emerge more successfully and make money, you need to be correct 7 to 8 times out of 10. So I do not think that I'm smart enough to guess the market, all right, so many times, whether is it going to go up, whether is it going to go down, so many times. Therefore, I don't want to be the fool to do timing market, and as a result, I'm not selling anything. So you understand why my reason for not selling already? Now, if that interests you, I hope you click like on the video, because the next episode, I'm going to talk about why is it that the economy is crashing and I'm not buying gold right now. So if that interests you, remember to click the like button so that when the video is up, you will be the next to be notified straight away. So this is Jason Strongerhead signing off. Bye bye everyone, and invest safe.